Welcome to Manifested Publishers.
So once we have that, we can then just move ahead to the base, to the optimistic case. We just, first of all, before we group, we just copy this part, again, copy, and we can skip this part towards the right there, Control V. Even if you were to just delete this part over here now, delete it, that, or we can just undo and undo. And we select this part and just say cut instead of copy. Cut there. And then we paste it right here. Control V. So that now we don't get disturbed by the space. And we copy this part up to 2022. Like that again. Copy. Sorry, I said cut. This should be copy. And we put it right above right here. Control V. And this case is what? Optimistic case. Optimistic case. In a similar font, just put that right there. And here we can just be able to group it right over here. So we group. Where do we group? We come to data. We come to group. You can see group here. We press the above one. Group, that thing comes. This kind of grouping comes. In terms of the outline, let's group it there. So we have even this one for the base case. Let's group it. We want our forecast to be from 2023 to 2027. So you can see I click this one, copy 2023 to 2027 like that, copy, and then we reduce the grouping right over there and compress Control V. It comes. Now let's look at systematically, step by step, what changes we have to make. So we again go through this. Clear the font, no fill. We make adjustments. Revenue growth rates are the forecast under the three scenarios, namely base case, optimistic case, and pessimistic case. The base case growth rate for the first year and forecast is 2022 CAGR. This is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 15%. Optimistic case is 20% above the base case. So we can come right over here to 21A down here. And we're saying it is 20% above. Here is a pessimistic case. We said it was 10% below. So you can come over here, optimistic, here, and say that it is plus this one, plus this one times, open the brackets, 1 plus, not minus, 1 plus 20%. It's above. So 20%. So for purposes of consistency, like that, 25%. So you increase 21% by 20%, it comes to 25%. So what are we told? We come back to tab B. 20% above the base case. So the base case was 21%, yes. So we are saying that it is expected to reduce like that. And we can say that now, come back over here, plus 22 like that, times, open the brackets, 1 plus, we come to this value here. That value, close the brackets, enter, 119. So for font, keep the font the same. Once you have 119, it's expected to reduce by what percentage? By 2%. So plus this one minus 2%, 23%. Then plus this one minus 2%, that 21%, and so on and so forth. As you move along, move along up to there. So what are we saying? This is 2023, and we can be able to increase like that until 2027. So fill series. So this will be the rates for the years over here. This is the years, bold that. These are going to be the rates right here. So we've picked 25% for 2023. Now we need to pick 23% for 2024. So we pick plus that value times, open the brackets, 1 plus what? The one for 2024. We come back to tab A. 2024 you can see is that one there. Close the brackets, enter like that, and you do the same plus that value times shift, open the brackets, 1 plus what? We are picking 2025. We come to tab, this next tab over here. 2025 you can see is 21%, and close the brackets, enter like that, and then plus that value over there times, open the brackets, 1 plus what? We are picking 2026. So we come back over here, 2026, and right over here is 19%. Like that. You close the brackets, and then you press enter. And then we are saying we press plus that value times, open the brackets, 1 plus what? We are picking 2027. Come back over here, 2027 is 17%. It's not reached the threshold of 15%. Like that, we close the brackets, and we press enter like that, and that gives us the revenue under the optimistic case. How about cost of sales? We already have the gross profit margin. So you can be able to compute the gross profits very easily like that. So we just come over here, highlight like that, the same format, painter there. We're saying it's just going to be given as the sales times gross profit margin. So plus that times the gross profit margin for 2023, that over there, gross profit margin is that. Once we have that, we just drag the formula moving to the right there. And then for us, it's going to be is equals to minus, so we open the brackets right over here, that one minus that value, and we close the bracket like that, so you can be able to get it consistently as a negative value there. So for format painter, you move across like that, and then you can now drag the formula moving towards the right. So to just check, so plus that gives us, so you can see this answer is the same as that one there, and even if you are to drag it moving towards the right, of course you can see that one is the same as that. Of course the decimal places over here come into play, but don't worry about that. It's actually the same. These are actually the same values there. So delete that for now. How about the operating expenses? We have the operating ratio. They are given to us there. We've been told, so revenue is done, put pitch there. Gross profit margin is done. We've done that. Operating expenses are modeled 3-year averages for the period 2020 to 2022. These are assumed to remain constant of the forecast period. So we just pick the expense ratio. To get the operating expenses is just the sales times expense ratio from 2023. Sales times expense ratio. So plus, so is equals to minus, because it's a formula like that, times the expense ratio, because it's operating expenses, expense ratio 2023, ndio hiyo iko hapo like that. Close the bracket, enter, move up. So negative value formatting, come to format painter like that. Of course in the exam you don't need to just really bother yourself with the format, but I'm just doing it because of to ensure that we have consistent results there. and consistency in terms of presentation. That's it. We just drag the formula like that. How about operating profit? Plus that should give us, that's so. I said plus that value plus that value should give us 44 there. Just drag it like that. It gives us the same, consistent answers. Format painter. Depreciation. We've been told that depreciation, we finished operating expenses, we've been told depreciation down over here to revenue ratio is assumed to remain constant over the 3-year average for the period 2020 to 2022. So we should remain here 0.9%. So it's just going to be the sales times depreciation ratio. So it's just going to be plus sales times depreciation ratio. 2023, there. Enter. Once we have that, we drag the formula towards the right, and we can be able to ensure consistency. So minus, then we open the brackets, close the bracket like that. Enter. But now here it should be negative. Oops, like that. How about the profit before tax, before interest and tax? Plus that, get the answer straightforward, move towards the right. Format painter, there. Finance costs, ladies and gentlemen. We are saying finance costs, we've already done depreciation right over there. Come to finance costs. They are expected to reduce steadily as the loans are repaid. Use the reduction rate in 2022 over the forecast period there. So in a similar fashion, plus that one minus, this is the depreciation rate, reduction rate. So 2023 there. Oops, it should be plus, this is 2023, that one minus that. I'm pressing minus or plus, sorry. Plus that one plus 1,000, yes, 2023, that. Yes, that's the correct value. Sorry, using this wrong formula. We drag it like that. Format painter. Profit before tax plus that, get that. We drag the formula like that towards the right, and we use format painter. Finally, or rather semi-finally, second to final, income tax expense. We've been told the income tax expense and the finance cost we've done. Income tax expense, calculate the historical average effective tax rate. Highlight that to show that you've done it, and it's just going to be plus that times this value here, like that. But because it's a negative, so you put negative minus. Open the brackets, close the bracket, enter. So we drag there. Finally, we have the profit before tax plus that should be able to have those values like given to you there. So format painter, you can see the values right there. So 2023, I need to ensure that there's consistency in terms of the presentation or the outlook over there. You can be able to see that we have concluded the optimistic case. So we have answered part B of the question. Prepare 5-year forecast statements for profit and loss for Sepetuka Limited from 2023 to year 2027. So just to recap what we've discussed, we were told to prepare a base case income statement, a pessimistic case income statement. You can compare, the 42 represents the base case, and the 40,000 represents the worst case or the pessimistic case, and towards the right over here you can see the optimistic case is 50, it's slightly higher as compared to the previous two there. So this answers part B. Hope you have enjoyed the lesson. Thank you for being with us, and God bless you.
Welcome to Manifested Publishers,